Good morning, ladies and gentlemen. My name is Greg McCloskey, and this is Kickstart Video. In the Kickstart Video, I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. Today's date is Friday the 13th, December 13th, 2024. Don't let it spook you. Let's get started. All right, let's look at the hourly chart of the euro versus US dollar. We had targeted this area down here between 1.0448 and 1.0461. The reason was a number of different swing lows and in this area, mainly the nice little floor here developed going back 3 or so weeks right here. We did not move below it here. We did move below it here. But you can see the number of different times that the market came down to that floor area and found support, including today where we moved even closer to the low of that swing area at 1.0448 before starting to see its move back to the upside. The price as we head into the U.S. session is back up testing of these moving averages. These moving averages have been instrumental in putting a lid on the pair, at least over the 1, 2, 3, 4, maybe 4.5 trading days here. On Monday we traded above it, but then fell below it and have been below these moving averages since that time. It would take a move above the 1.0526 level. That's the 200-hour moving average, the highest of these moving averages, to tilt the bias back to the upside. Have traders looking back toward the 38.2% retracement of this move to the downside right through here. If we get above that 38.2% retracement level, that would open up the door for this swing area overall. If I put a red box around this area right through here, this is where most of the trading activity has taken place, going all the way back to, before mid-November there. So that's a pretty long time, over a month or around a month, where the price has been trading up and down, mostly between 1.0448 and 1.06097. That's not a big move. Yes, we did move below it here, and we did move below it here, but those were fairly short-lived in relative to the amount of time that we spent in this value area. So be aware of that. And this area up here would be the next target if we're able to get above these moving averages and start to make a play above the 38.2% retracement. But right now, with the price trading below those moving averages, this is an area where sellers might be interested to keep the lid on the pair like they have earlier this week. Let's take a look at the dollar versus yen next. And if we look at this currency pair, this consolidated over the last few trading days, with the price finding resistance against the 200-bar moving average on the 4-hour chart. Also in play was the 50% retracement. Those levels come in at 152.69 to 152.78. And in trading here today, we moved above that level, then came back down to the 50% retracement, found support buyers before moving to the upside. We have moved up to the 61.8% retracement of this move to the downside, and we did find some sellers against that level, moving back into this swing area here, which was a pretty decent level right here. It was a different resistance there, and then became support here, forming this floor. We fell below the floor, traded above and below it right here before moving to the downside. We came back up to it and trading here today and moved through it. And right now we're back into that level. Watch the 153.26 level. If we move back below that level in trading here today, we could see some further downside probing as the market tires after reaching the 61.8% retracement. But this area right here, which was resistance earlier this week, will now become support between 152.69 and 152.78. So be aware of that. And the dollar versus yen buyers are taking control. Finally, let's take a look at the sterling versus US dollar. A bunch of bad data coming out of the UK sent the price lower, but we came down to this 0.26147 level. I have that outlined with a red line right here. It's also the high of this swing area going back in time to here. We also, last time we came down to that level, we found support buyers and moved to the upside. So here we do come back down to the 1.26147 level and found support again, pushing back higher, and into this swing area right through here. That comes between 1.2658 and 1.2670. Just above that is a 100-bar moving average on the 4-hour chart. We're going to need to get above all these levels right here to increase the bearish bias. Or will the sellers lean and push the price back to the downside? That's what's at stake right now at this area in the sterling versus US dollar. If you're more bullish, you want to see the price get above 1.26749. If you're more bearish, this is a place where you want to sell and push the price back down toward this swing area. Now, I've outlined and emphasized this 1.26147 level. What's so significant about that, other than the fact that it was a swing, the high of a swing area in this area right through here? And if I go to the daily chart and take a look at the 50% retracement of the move up from this low right here to the high price right here, this is the 2020. Well, it looks like 2023 low. 2023 low. Well, anyway, it was this low right here. The 50% midpoint comes in at 1.26147, exactly where the price has bottomed in trading off of that hourly chart right here, and also back here a few weeks ago. So be aware of that level, and it was a nice hold there for that currency pair. So there you have it, a technical look at three of the major currency pairs to kickstart your trading day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.